Welcome back, and joining us on the show is Paul Bartholomew. He's senior analyst at metals at S&P Global Insights. Paul, hi, good to have you. Wishing you a very happy 2025. While the last year was quite mixed when you look at metals, this year hasn't started on any great shakes. I mean, clearly the markets are waiting for direction from what US does. How are you looking, especially at steel and iron ore prices? Because we've started the year with sharp declines for iron ore trading below $100 a ton. Let's start with that one first.
Yeah, well, happy New Year to you. It hasn't certainly, it's sort of carried on, I think, some of the negativity that we saw at the end of last year. Obviously, it's sort of still early days, and even China has a couple of days off over the Christmas period. But I think there's been another government meeting, one of a series of government meetings that there have been over the past past 12 months that have all kind of ended in a little bit of disillusionment for the market. I think when these meetings come around, and there's obviously the most important one probably is in March, which is the big annual government meeting. There's always hope from the market that the government are going to do more to inject some sort of metals and steel supportive stimulus measures, but we might see a bit of reaction sometimes for a couple of days, but then typically the prices will sort of decline again, and we'll see that kind of bearishness. But I think the problem is there's a couple of things really. There's obviously the challenge of the very, very weak property sector, and we expect that to stay weak again this year. I think the government really just going to be focusing on trying to stabilize things, more than anything. And of course, there's that other big factor, the incoming Trump government in the US. So I think everybody's kind of a bit watchful and circumspect at the moment, just waiting to see, what's going to happen. But yeah, certainly not a mood of buoyancy at the moment, sort of, I think globally and particularly in China.
Oh, well, absolutely. If China was under a lot of pressure in 2024-25, brings in Trump as the new president as well. So what's your sense when you look at this quarter itself? And of course, much of the policies from US would get cleared by end of Jan is what the markets are looking forward to. Overall, a bigger picture, global picture, how does that seem to you? Do you see China property sector finally picking up? Do you see metals demand growing? While we are talking about steel, there's a lot of conversation on green steel as well. How do you see that?
Yeah, well, I mean, I was talking to my colleagues in the US earlier today, and I think, we're constantly as a company thinking, what should we do? What should we what sort of analysis and pieces should we do on the incoming Trump sort of government? And I think we've just really decided just to kind of wait and see, because the thing invariably happens with Trump is things happen very quickly. So I think, within a very short period of his inauguration later this month, we should get a clearer picture of whether these tariffs that are, obviously it's not just countries like China in the US's sights potentially, but the near neighbors, Canada and Mexico, etc. Whether these are just going to be sort of bartering tools, bluffs, or whether there's going to be some reality. But I think one of the things we have seen, certainly after the US election last year, was there's been a lot of activity, people trying to export manufactured goods. I think it sort of pulled forward a bit of activity in anticipation of potential tariffs. And of course, if that happens, it's really going to disrupt global trade flow. So it's going to have an impact on things like EV supply chains in the US, which will have an impact on copper prices as well. But so much of a lot of the kind of steel and metals industry has been set up, some of it's been set up around the other side of the Mexican border as a kind of way of, when China was sort of shut out of it. Well, can Mexico and China be kind of locked out? I mean, that's obviously going to have a huge impact, really, and potentially an inflationary impact, in the US. I think in terms of green steel, I think still most of the activity is taking place in Europe, but we've seen, quite a few projects being walked back on, some big hydrogen projects, even in Australia, but certainly some of the green steel plans not saying that, the carbon targets are the same, but by specific companies, we've seen them kind of walking back a little bit on some of their project timelines. And that's just because the market's very, very weak. When margins are weak and demand has just consistently been weak now for about 2 years, it's very difficult, I think, sometimes to make big structural changes around green steel. So, if Trump comes in and is sort of fairly negative around, I guess, some of those environmental issues, again, that could be just something else that kind of pushes back some of that progress. So, but I think we're very much in kind of wait and see mode. Whether we're going to see some of these announcements happening quite quickly, or whether, as I say, it could just be sort of bargaining chips, and it might not be quite as dramatic as potentially at the moment.
Okay.
All right, we take that point. Thank you, Paul, for joining in. Manisha, for taking us through with that conversation on the metals outlook for 2025. Meanwhile, the market seems to have picked pace once again. A bunch of stocks which are spiking. Reliance continues to power ahead for the bulls. The Nifty is now just about 60 points away from today's high of 23,795. Let's see whether we go ahead and cross that today's high as well or not. And ICICI Bank is the other one which is actually taking it higher, closer to 50,350 for the Nifty Bank as well. The mid caps continuing their march forward, up around 1% for that index. Dixon Tech is the other one from the broader markets, which is currently moved to the high point of trade. We'll keep an eye out on the markets as we move towards the close of this show halftime report. Broader markets doing a lot better, and we do have a bunch of stocks which are now making an attempt at recovery once again from the day's low. Take a short break. On the other side, we have the team of Business Lunch taking all the market action.